Glad to know you're still with us. The NGXL share index and market capitalization appreciated by 1.26% to close the week at 48,154.65 and 26.229 trillion respectively. A total turnover of 839.978 million shares worth 12.418 billion naira in 16,183 deals was traded last week by investors on the floor of the exchange, in contrast to a total of 711.618 million shares valued at 15.33 billion naira that exchanged hands last week in 16,662 deals. The financial services industry led the activity chart with 616.627 million shares valued at 4.305 billion naira, traded in 7,609 deals, thus contributing 73.41% and 34.67% to the total equity turnover volume and value, respectively. The conglomerate industry followed with 78.470 million shares worth 260.581 million naira in 575 deals. The third place was the ICT industry with a turnover of 46.619 million shares worth 5.717 billion naira in 1,222 deals. But that's the update for last week, and we have right here with us Ambrose Omodio, the Chief Research Officer, Invest Data Consulting. He's right here with us in the building. Good to have you join us today.
Thank you, Perpetua.
All right. So very quickly, let's look at the numbers for last week. What are your thoughts?
For me, what we saw was expected in the market.
Okay.
It's an extension of the bull run we saw in the month of November, and that is the first 2 trading on the month of December. Being the last month of the year, any season is already there, because I tell you, by January we start seeing different set of number, unaudited account, audited account coming from that. This is the time for any design investor to position ahead of those numbers. And don't forget that for the straight 3 weeks now, we are seeing a bull run with a stronger momentum. This is a signal that on a daily chart, on a weekly chart, on Monday, we are seeing a buying move in the market. I started last week up about 95% buy position and just 5% sell position. It tells you that people are relatively in those blue chip stock that has good dividend yield. I tell you that it is not all stock that we want to now, because there's something that you are not sure dividend, but those that are sure, we have seen their performance for almost 5 years, and they grow their dividend on a yearly basis, and the numbers are pointing that they can also do the same thing this year. That is where it should be. And because dividend yield in the market is becoming attractive now, because that some funds are leaving gradually the fixed income market. I said here before that time and price is very, very important. We're looking at that stage now, because between now and end of April, which is less than 6 months, we are making more than 6%. Because if you are putting your money in Treasury B, as now by this week on Wednesday, about 54 billion is going for Treasury B. It depends the rate again. I tell you that investors, for me to stay for less 6 months and make almost 14%, now put my money in Treasury B for 6 months and make just 6.7% in Treasury B. You know, that's very that as a good smart investor, you need to go to equity now and come back later if things change. For me, companies have shown that the earnings are strong, and this will support a higher payout. And if you are buying at this price, you are not buying it because you have seen the dividend. This is what they paid last year. I'll give you a sign that this is the any as at what they paid last year. If the company increase the payment again, because most of them have, as I said earlier, about 10 to 15 of them have beat their 2022 performance for full year as a third quarter. And as I know, most of them have covered about almost 50 to 70% of their performance, including what they did in full year last year. This says that this company has a good potential to give you a better dividend. For that, just hold your money, go to those stocks that have that dividend, especially the banking stocks become attractive, those in the telecom become attractive, the agricultural sector. And I tell you, like I told you last week, that if you look back and say which sector will actually support our GDP, you know, if you are thinking that way, you should go and check their performance also. As at the third quarter, they've done well. This company continues, because nothing has changed between October and today.
All right, before you show us the screen, I'm just being curious. I mean, this has been a period where we have economic headwinds, and yet, how are these companies able to give this better than expected results? That
is why, as an investor, because you can't predict totally what will happen tomorrow, as you are buying, you have what we call your stop loss and profit target, because you are in the market to make profit. Don't just be carried, oh, market is going up. Set a target that is achievable. Don't say because market is going to want to make 100% in the market, 25%, 18%, we are good to go. Because if you are going to wait, oh, let me make 5%, that is the same market that will take you up will bring you down. That's why don't be carried away because we are seeing market going up in the midst of headwinds, as you don't mention, and want to just sit down, invest and go and sleep. No, you invest and watch your trade. That's why I say trade your plan. As you know, because all these things are coming, most companies also are navigating in between these headwinds. For companies that have, know that yes, they've increased cost of production, and I'm going to pass the cost of production to my consumers. These guys, they are less relaxed because every party their price will still make money because they increase the cost of their product to cover the cost of their sale. But some customers that they can't increase their sale. Once you increase your sale, your price, they dump your product. You get what I'm saying?
Of course.
All that means you go into loss. Then you as an investor, because market is going to let me for those who go and now. You look for sectors that you know that they have factors that are driving their price, either policy or because of sentiment or because of the season we are.
Essentials and the season, like you said.
Like season where we are there. This should be, and as I said earlier, you must have a plan you are trading. Don't trade because my friend is buying. No, you have your plan. You know the cost of your phone. If you are using your money, you want to pay school fees to go and buy, Japan or go and buy. You go at the end of the day, you are buying stuff that has name because things like yes, I said, good cheap stores and value stores that have good fundamental is what investors should be looking at now. The good thing is that, like you just said, if you look at this chart now.
Okay.
This time we have a daily chart and a weekly chart. Why I say if you look at chart, this is the time for to don't rely on fundamental alone. The fundamental will always be there. Why sentiment will change? And that sentiment is between the psychology of people that are playing the market. We are not only one playing the market. The people that are looking at this one, what I'm looking now. When they see action, they take action. You that are very because of fundamental and down free hand, they will selling on you. That's why you need to understand what is the fundamental doing and what is technical doing. That is the sentiment of people in the market, the players in the market, how they reacting to one information or the other. And for you to get it, look at your chart, you see their reaction on the chart. Because like today, you can see at the end of Friday, market was already up, about almost getting over 1.2% for that day alone. You can see that this is a cup and handle that the market have formed already. And in terms of analysis, when you see cup and handle, it says that the price has higher upside potential to go. And we have seen it already forming on a daily chart. You now move, okay, let's go and see our weekly chart to see what is happening. On the weekly chart, the market across 50 days moving average, and that is a very strong cyclical line that everybody is looking at. 50 days moving average and 20 days moving. It across it tells that there is strength in the market. The momentum in the market is still very, very strong, and that I'm not surprised because this is the end of the year. When everybody wants to position forward the new year, and most of the company investing has December as year end. And then we expect to see the full result starting from January next year. And you're not buying now. When will you buy? You need to buy in February when the price is up again. That's why both everybody in the market, the student investor, only that what is telling us that we have not seen the impact of the smart money on student investor because the volume in the market is still very low. Yes, what we saw last week was that an average traded volume about 800 and something million shares against 600 traded the previous year, week. It's an improvement, but we need to see more volume to show that yes, institutional investors, smart money are already more bought. I told you that because of this minor redesign here and there, when I ask you that this is the timing is short or not, I'm telling you people don't understand what CBN is doing. And taking their money away from their kitchen and their toilet to work to go and buy something.
All right. I think this is a good place to end the conversation. Thank you so much for sharing these insightful thoughts with us today.
Thanks for having me.
All right. We'll take a break now. When we come back, we'll delve into some other conversations that will definitely interest you. Stay with us.